Stop being a when the market dumps and put on your big boy pants because the market is providing such a beautiful opportunity. I know we got the Middle Eastern conflict and the world is on fire. You turn on the news and all you see is the economy sucks. However, I'm going to showcase where smart money flow is moving, how we are going to seize that opportunity because we have 1,200 plus professional students that I've coached and we are looking for such wonderful opportunities to present itself. And I'm going to show it to you right now. All right, because we don't have much time, I'm going to tell you exactly straight. With the Middle Eastern conflict, usually when there's uncertainty in the markets, two things happen. We always have oil prices going up and they'll start safe haven money into certain assets. For instance, physical gold, which for the everyday normal person, what are you going to do? Start hoarding bars of gold in your house? Absolutely not. As much as I love, gold, I'm not going to do that. Now, there are other ways that you can capitalize it because the other thing too, most retail traders will be like, oh, I'm going to start buying oil. Do you want to be late to the party again? Oil is at all-time highs. There is more risk than reward. However, most retail, especially, unless you have an insane margin to trade gold futures, you really cannot. And there are other safe havens where money flow is showing. We have phase 2, which is the absorption, the bottom. The VIX starts pulling up or settling, Safe havens kind of pull back. Gold drops 15 to 20%. This is actually where we're at right now. And then we have the rotation, which it takes about a year or 2 years. The structural bid kind of returns, the bond market kind of realizes, and the fact that obviously we have $38 trillion of US debt, we have to, cut rates, print money and print liquidity, and smart money starts accumulating. And then we have phase 4, which is the new highs, and eventually the whole market cycle accumulates. Now, with that in mind, I'm going to showcase the SPY right now. The SPY at this moment in time, it's pretty much almost market close, and I'm not imagining that we're going to change that much. It is all sellers this past week. We are officially in correction territory. Now, where do I see us going from this? We are having no wick right now. I see us going to 618.30. Eventually, if we start losing that level, we'll probably, we'll have lower highs here and there and continuously going down, especially unless the narrative were to change. On top of that, we're talking about gold. Well, if we look at gold and we're talking about the liquidity sweeps and scaring retail. Well, if we pull up GC on the weekly, we have 1, 2, 3 weeks of a dump. On top of that, we move down, but then what does liquidity do and sweep? They move price and it's all buyers. Now, most retail will not be able to withstand this kind of volatility. First of all, this is futures. Contracts require a lot of margin. Most retail will freak out and not have the kind of margin required, and they just won't want it, which is the reason why I suggest highly do not hold, physical gold. Do not, unless you are a day trader, which I am not, and most of the professionals in our community and our 1,200 plus are not. Trading this kind of stuff is a lot more difficult. Now, I'm going to showcase with all this happening in 2026 world, where money is kind of flowing. So we just showcased that the SPY is obviously dumping, but with my isolated ETF list, you can see there are some lights at the end of the tunnel. Now, because we're looking at swing trading and we want to look at larger timeframes at hand because we're talking about the whole cycle. If we kind of go through all the tickers, everything is in correction territory. However, there is a sea of a little bit of life, which if consumer staples, which is XLP, XLU, which is utilities, energy is green, then that means we are kind of at the end of the cycle. Because if you start looking at, so for instance, XLK is in correction, or it's in bear market territory. We are down 14% from highs, actually a little bit higher, I apologize. We are down 15% from highs. And so it means Wall Street institutions, smart money is slowly dumping big tech stocks. But if you look at all of these, which is what I have all the ETFs, energy, utilities, and consumer staples, they are moving higher. Now, when stocks like these, because they're heavily defensive in nature, is moving up higher, that the market is in a state of volatility and uncertainty. So for instance, I can pull up the VIX. It is, the VIX is also in an elevated state. Look at this. So volatility is high. Market never likes uncertainty. Now, the question is, where do you go from here? You can look into consumer staples, utilities, and energy. I would highly recommend not touching because this is so late. There's a lot of opportunity. There are certain things that I'm going to be watching for. So, for instance, I'm going to pull up the first one. which is, and I want to pull it up because there's certain levels that I'm watching for. Microsoft most likely will be going a bit lower. We just dropped, and we're seeing all of big tech kind of dumping, right? Just especially with OpenAI narrative is kind of changing. Tech stocks are more risky. Wall Street is kind of retreating into safe havens. And you have to think about this too. Big tech will lead the way for some time, but eventually stocks that have died will also eventually lead the way because they have to rotate their money out. So if I'm looking at Microsoft right now, this one probably for me has the most opportunity. We have had a large dump. It is down 38% from highs. The monthly is, I mean, it's brutal, right? But there's a few things I'm looking for. We are in bear market territory. On top of that, their Azure cloud is growing by 40%. Even though companies may be slowing down hiring, doesn't matter. The companies are still using Microsoft. If you zoom out and really see, whenever we start brushing the lower Bollinger Band, look at the explosive move. And this is also the part. March has been a particularly difficult month, I think, for a lot of traders. And just in general, if you can't stomach volatility, but you have to be patient. And what am I looking for? Well, realistically speaking, it looks like Microsoft is going for 345. Why do I say that? It's because we have a lower wick right here, and that's when we started moving up higher. Within trading, what do? We start looking at previous patterns because we are hypothesizing from previous data sets. Now, what's the data set points that I have? Well, back in 2023, we were officially in a bear market. And what did we do? We brushed a lower Bollinger Band, accumulated sideways. Accumulation is sideways action for several months. And what are they doing? Wall Street is hoarding shares and they're accumulating, making price seem super boring. And then what do? They move price higher, which is what we saw here. We saw back in 2025, April, and I anticipate to see the same thing again. And also notice the Bollinger Bands, we do not touch and brush the lower Bollinger Band that often. We brushed it once last year, again in 2023, but it only happens every few years. Huge opportunity. And if you have diamond hands and don't do anything, well, shame on you. But at the end of the day, because we are advising our 1,200 plus professionals, we are warning them, but can I give you like secret piece? I'm setting my alerts because I'm anticipating it's going to show signs, something like this, a strong hammer candle with all buyers, because eventually value is going to showcase there. If you want to work with me and actually build a custom rotational plan, link below. Now let's get back to Microsoft. In my last video, I kept on saying that NVDA, I was waiting for it to jump below the relative equal lows, and it's finally about to do it now. This week, we touched several times around this 170 level, and we are starting to finally break through. And this is one thing. When it starts touching a certain level more and more, it gets weaker and weaker. And as you can see, it finally did because it rejected off the 20-day moving average, off the weekly, and now we started to make it a lower high on top of XLK dumping as well. And the whole narrative of Sam Altman is kind of going to a pile of garbage. And basically, is he making false promises? It kind of sounds like he is. This is just something. If you are an investor and you don't have NVIDIA in your portfolio, this is a really, talk about a moat. Current price, it's around 168, 167. I'm filming this a little before market, closes, but it's not going to change that much. Market cap is $4 trillion. It has a little bit of a small dividend yield, and it's cheaper than actually Google right now. A forward PE of 2154 is cheaper than Google, even though I'm biased because I think Google's going to win it all. But I think NVIDIA is a fantastic company, and they are going to win, primarily the AI race, in my opinion. Also, despite, the market cap being $4 trillion, they are trailing at a significant discount from previous histories. Usually it's around 61, and it's suggesting basically the price, even though it's high, the earnings growth is going to outpace and outrun the actual stock's appreciation. Now, what am I looking for? Realistically speaking, as you can see, I have these dotted lines. I have alerts set everywhere. I'm freaking ready to go. What am I looking for? I have alerts set because it's, NVIDIA is probably going to go ultimately to my levels of 150 is what I'm searching for. Why do I say that? 150, well, we were right around here. We were consolidating for quite some time. We started to break out of consolidation. It's going to retest that zone. On top of that, if you look, on the monthly time frame, you can see throughout history, it keeps on going up. And I mean, what is it a coincidence that it's touching the 20 MA? No, a lot of times there's opportunity when it brushes the 20 MA, because if we were to brush there, we are now talking close to a 30% bear market for big tech. And this is the part. You and everyone, I'm sure, would slap yourself if you're like, dang it, I wish I bought all those things during April 2025 Liberation Day. Because you know what happened? I bet you so many students and so many people before they joined Trader Foundation, they were saying, but it's gonna go lower and I'm scared. Shut up. Stop being a little and you put in your big boy pants and you seize the opportunity in front of your face. Now, I'm talking about this from an investor standpoint. However, regarding, swing trading, you can look at weeklies and monthlies. Eventually, this will show signs of life. If I see something like this candle above average volume, I'm going to play longer term expirations for options. But if you're an investor and you're like, I don't have any, looking at the opportunity, there's a lot of things coming into light that you can take advantage of. If you want a portfolio that really grows, well, you're not really going to have a portfolio growing if you're buying just consumer staple stocks. No, obviously I always encourage everyone to have diversity in their portfolios. However, if you want like real true growth, depending on your outlook, the only way is through technology stocks like the Mag 7, which is NVIDIA's, the Google's, Apple's kind of like more value stock now, but it's the big tech stocks like these. Trading right now has been particularly really difficult. A single tweak can destroy you if you're over leveraged, position sizing, risk management, right? Everything is right now. And I'll be totally transparent too. We have been very cautious because you have to be. But the thing is, at the end of the day, the opportunities that are presented right now, there is a lot of them. And it's up to you if you actually want to take them. Now, in our very professional community, we don't really take that many people. If you want to work with us, like and subscribe. And again, we only work with like so many people because we're busy.